very good evening, friends. This is Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. Today, let me tell you a small story. And this story is about the recent events that had happened in US. In fact, going on in US. And there is no guarantee that it is not going in the different parts of the globe, to be honest. It is going in the different parts of the globe. But before I start this story, I'm extremely pleased to share that our TRFX platform, which is like an OTT platform, EduLearn platform, TRFX Academy, is few videos away from 100 mark. And now more than 14 different series are open, wherein we are uploading the private videos. And these private videos are covering almost every topic of the finance. And Treasury Consulting already entered into the wealth management. Wealth management doesn't mean the other way. Wealth management means the inner learnings way. So in the stage one, we initiated the learnings wherein we are teaching people the mutual funds, and slowly, we will increase the complexity. That is my surety. You know our technical skills, so nothing to worry. Apart from that, the news desk is also going well, and multiple products are going well, and more products are on the cards. I already told people that on the very first day of 2021 that 2021 would be the most difficult year as far as the financial markets is concerned. And thanks to Lord that this prediction is true. Not only from the first day till now, the world is facing unexpected rise and fall in the financial markets. And of course, the commodities also. And the geopolitical factor is also shaping up, because we know that what is happening between China and Japan, India and China, and as usual, US and China. Mr. Biden is officially less than 1 month old president in US. Until now, he not yet decided about the phase 1, phase 2 and phase 3 deals which Donald Trump did with the China. Basically the tariffs. So, and I'm sure that sooner or later he needs to take that action. He cannot procrastinate that thing for a longer period of time. But in between, there is an app that came in public domain. This app gives an high. The investors who are on this app, without having any information, they just did what the app is saying, and end result, the stock went up. The app did the same thing with commodities also, which is called hype. So let me give you a simplistic example, and this is nothing but the short squeeze. Let me give you a very simplistic example of short squeeze. What exactly is short squeeze? We have a category of investors across the globe, and this category is known as hedge funds. Hedge funds are the most powerful trading platforms we have in the globe. That's an unfortunate fact that effective 2015-16, many hedge funds closed because of their mistakes. They took the wrong bets, and sometimes they took exorbitant bets. So there is a difference between wrong bets and exorbitant bets. Now, wrong bets means they took the bets which were not required. An exorbitant bet means that they took the bet, example, at the place of $1, they placed $1,000. And leverage is like a friend by the time it supports you. It's a foe if it goes against you. Very recently, as I speak, that one of the hedge funds collapsed in the world. and one hedge fund is really struggling to pay even a monthly salary, monthly official rent. I will not be surprised probably in 2021 many more hedge funds will collapse. I'm not going to be surprising, to be honest. This app creates short squeeze. What is short squeeze? Let me first explain to you. Hedge funds generally take the short positions. What is short positions? That I'm not saying they always analyze that. Sometimes they take the blind positions also, because hedge funds have one thing, that they always take contrary bets, and contrary bets not always pay the result. That is also a fact. So example, I'm just creating a hypothetical example of a short squeeze. I'm just creating a hypothetical example. It is only to teach you people. It's a complete hypothetical example. I will once again explain. Take the largest hedge fund of the globe, PIMCO. PIMCO is assuming that Tesla, who is currently around $650, will fall to $200. So PIMCO is having some mindset, they have some research, whatever. That research suggests that Tesla will come down to 200. Okay. So PIMCO shorted it. PIMCO short this stock. And assuming the total float of Tesla is 50 million shares and PIMCO hold 20% stake in Tesla, or take it 5% stake. Slowly, different hedge funds like PIMCO, they also shorted it. We are living in a world of financial market when if a hedge fund do something, this information goes to another hedge fund in a span of seconds. This is called interbank desk. You cannot run away from interbank desk. If you think that you can run away from interbank desk, you really need to understand how it works. Today, if any bank in the world do a trade, in a fraction of a second, the interbank partners get to know that this bank did the trade on this customer, on behalf of this customer, and this is the amount, this is the maturity. And some interbank player creates the counter trade. So PIMCO, just take a hypothetical example, PIMCO shorted Tesla. PIMCO believes that Tesla, which is at 650, will go to 150. Okay, no problem. Venture capitalists, what they are doing to the economy, we all know. Example, Uber 100 billion valuation, WeWork 50 billion valuation, Airbnb, and list is very long. There are many trading apps which we have in the world, those who are funded by the venture capitalist. And I am going to tell you the real reality of that. These trading apps give money to the people to join them. I don't know. How can you offer money to your client to join them? Can you even think of that? Can I even think of offering somebody 100 rupees to take our courses and consulting? Why do I do so? If I believe that my product is good, I will never do so. But what is happening is that there are many apps we have in the world, those who give money to the investors, that if you join our app, you will get this voucher, this voucher, this voucher, something like that, and you know the investors. Investors never look in detail. Rather, what investors do, they go to the app and just create their account. These apps are internally linked with the high frequency trading units. That is also a fact. And on an offer note, it has been proved that the high frequency trading units did a lot of action, not only in equities, commodities, almost every sphere of the group. Now what happened, this app will give you some stinker, XYZ app will give you this stinker that this stock will move up. And this move up is completely opposite to the hedge fund. Hedge fund believe that the stock will go down. App is saying the stock will go up. 99% of the investors even do not understand the meaning of intrinsic value, forget the computation of intrinsic value. they buy the stock. And do you know, in many cases, the people who buy the stock, they are themselves people promoted by the venture capitalist. So suppose there is a stock called XYZ. Say, take Tesla. Take Tesla, same. App is saying Tesla will touch 1200. Initially, venture capitalists come into the picture, or the people sponsored by venture capitalists come into the picture. They buy the stock, it go to 750. Retail investors, this app was right. This app was right. Tesla going to 1200. Madness. And even if Tesla don't deserve to be at 1200, Tesla reached to 1200 because everyone started buying this. The hedge fund who shorted the stock is in big trouble because he short it at 650, and now in a span of 3 days Tesla is 1200, which means almost 90% loss. And hedge funds don't do 1 million, 2 million trade, rather they do a big trades. And today when I was looking at the Bloomberg and I got to know that another hedge fund collapsed and they lost around $2.75 billion. $2.75 billion. And I don't know how many collapsed. As the time pass, we get more information. This magnets created a huge hype. This is phase 1 of the short squeeze. There is another phase of short squeeze, which is known as phase 2 of the short squeeze. The hedge funds who not shorted it earlier, like PIMCO. Now let's take a simplistic example. Take my favorite bank, Goldman Sachs. All hypothetical. Goldman Sachs not short at 650. They waited for it, and now it is 1200. Goldman thought, let's short at 1200. It is safe. Goldman sold at 1200. This app euphoria is like a wild in the fire in the wild, and it is like Tesla go to 1500. Goldman also lost. To compensate the losses made by PIMCO and Goldman, they buy the stock. They feel that let's buy it, go to the reverse side. They tend to feel that they are on the wrong side of the curve. In our parlance, it is known as the wrong side of the curve. They feel that it is wrong side of the curve. So what they did, they tend to go on the other side of the story. And what happened? Boom. Tesla goes to 1800. Fundamentally, Tesla comes down once the market cools. The venture capitalist who earlier bought at 650, they sold at 2000, maybe more than 2000. Huge money. This app investors who bought at 1500, 1600, 1700 until 2000, they lost it because stock will collapse immediately. And everyone is sleeping. This is called short squeeze. And this is really, this has just happened very recently in the US market. And guys, I'm telling you that short squeeze is not only restricted to US, rather it is restricted to everywhere, let it be honest. To everywhere. The only thing is that people do not acknowledge it. And retail investors are going to be losing it. So whenever you see that a stock price is rising like this, just have a cool mind and understand, can it be a short squeeze? And by the way, all those people, those who think that short squeeze are only done by the hedge funds, they forget that short squeeze are often done by institutional investors also. Sitting in your country, they can do the short squeeze and even regulator will never get to know. And by the way, who is regulator? The first question is the competency of the regulator. We have recently seen this in the 3 stocks of US. We've seen in the silver, and God knows many more to come. And by the way, Unfortunately, there is a huge funding which is happening to the many apps. Like Robinhood got $3.4 billion. They first said they got 1 billion, now they said they got another 2.4 plus 1, which is 3.4. And I'm sure that I term this as app mania. This app mania would surely continue. And I think we are moving in a world when things are fully operated. On face you see X, but reality is actually Y. And by the time these things comes in public domain, thousands and thousands of investors lost because they even don't have any idea exactly what they are up to. Because investors don't have any knowledge. That is the basic problem. What had happened in the US is it's basically an eye-opener fact that investors do not have any knowledge. Only one app promoted something and it is like, so this is just a hypothetical example we created with take Pimco, Goldman, Tesla, just a hypothetical example. The real example, it's on the Google, but I don't want to replicate that, the real example. In many cases, short squeeze happen in those stocks who are dying. Business evolves. Like there was a time when people used to sell books in shelves, then markets, then supermarkets, then e-commerce platform, then Amazon, and now Kindle, audiobooks. If I need to have something, I will go for audiobooks. But there are many companies still, those who are doing the traditional business and somehow they are surviving. The hype is only to those stocks, those who are somehow surviving. Because they cannot do the hype of Apple, Microsoft, Google, Accenture, Amazon, Facebook, because majority of the information about this company is in the public domain. And even if they do so, example, if today somebody will create a hype that Apple is coming up with an iPhone who can track the next pandemic, Apple will immediately come in market and say that this is a fake information because no such phone is coming. Or somebody say that Google is now amending a search engine where you need to pay. Google will immediately come in public and say, hey guys, when did I ask you to pay me? You use my search engine, I'm not asking you to pay me. Because big companies are always 24/7 tracking. So they immediately come in the market and correct. But few companies with the help of these apps are actually making wonders in the market. And retail investors are losing. That's the biggest problem. This is called short squeeze. And short squeeze is having two phases. Unfortunately, in the US incident, we only got to know about phase 1. Media missed the phase 1, or maybe they asked not to told you about the phase 2, but I told you about phase 2 also. In the next video, I will tell you what is market cornering. Market cornering is different than the short squeeze, but it is as potential as the short squeeze. Institutional investors, foreign portfolio investors, and all these people, they do both. And sometimes they do either, sometimes they do both. This is Rahul from Treasury Consulting Group. You know my personal number, which is +91 9899 242 978. Have a great time.